So the way I'm planning the part is speakers to have a round of introduction. Then maybe if they have a comment on the presentation that Max gave us. And then I have 1-2 questions each. And then we open up to the big question session. So I think Alex has to leave us in 13 minutes. So we'll start from him. Just introduce himself and tell us the amazing story of selling pasta to the Brits.
Can you guys hear me?
Perfect.
Cool. So yeah, I went to Columbia in 2000, graduated in 2008. I'm from Genova. I live in London. I worked in finance. Pasta Evangelist is my second company. Sadly, the first one didn't work. Started Pasta Evangelist 3.5 years ago. And I think what we've learned is that for sure food is an interesting category. I'm not going to say anything very original, but it's these are big markets. It's quite easy to generate some revenues. Whilst they're competitive markets, there's quite significant opportunities. It's a category where it's quite easy to hire people because it's easy to understand products. It's products that people consume. So we're finding hiring talent very easy. Very easy. We get CVs every day. So it's easy to build traction. It's easy to build a team. For sure, food tech. These are hot segments. And what I think is interesting is that all the big food groups have got very, very limited exposure to dark kitchens, online, food tech, and so there's a lot of disruption, and it's at the beginning, right? I mean, food tech didn't exist as a word 7 years ago, I think. It's a relatively new space, and it's very topical, and the big boys don't have exposure to it. And the world is changing. I live in London, and we launched our dark kitchen business in March, 3 months ago, and we weren't sure it was going to work. In March, we did £2,000 of revenues. In June, we did 85,000. We've had, we've created a new line, a complete new business alongside our online business, working with Deliveroo and Uber Eats overnight. Of course, it's a good moment because of COVID, and dark kitchens didn't really exist 3 or 4 years ago. The concept, our main business, our online business, pastaevangelist.com, is a subscription pasta business, which may sound a bit strange, pasta through the letterbox. But this month, in June, we sold 100,000 pasta dishes all over the UK. And so it's a business concept which maybe 5 years ago, maybe wouldn't have worked, maybe would have been not possible. And now it's mainstream. Now many people are copying us. So the world is changing really quickly. And it's a really exciting moment. And there is demand for these kind of products. Everyone uses Deliveroo. Everyone is buying food online. The e-commerce penetration is growing massively, and it's happening right now, literally right now. And so I think it's almost an industrial revolution that we're living, and it's so exciting. So I think that these have been my main learnings. I think the other cool thing is that we are a pasta business, a fresh pasta business. Pasta's been around for a long time. There's big companies in it, Barilla, big multinationals that are good at what they do. Having said that, there is tons of room for disruption, not only from a commercial perspective, as I mentioned, but even from a product perspective. So our pasta and our sauces is better than any pasta or sauce you will buy in any supermarket in the world. And we're not very intelligent. We haven't invented anything particularly clever, sadly. Or it's more about, because we're doing a fresh product, artisanal products like you would get at home. And so many food and beverage categories, I think beer, chocolate, coffee, pasta, yogurt, they've over the past 10 years, they've evolved very quickly with new brands coming up with higher quality, more premium, smaller batch production, higher perceived value, better storytelling, new brands, focused brands, hurting the big incumbent FMCG brands. And so it sounds a bit crazy, and people are like, Alex, Barilla can copy you in a second. I mean, maybe, but in practice, they're not doing it. I don't think they will do it. And I'm not sure they're very well equipped to do it. And so there's a lot of scope for new brands, creating new concepts in food, both from a product perspective and from a distribution perspective. And with online dark kitchens, you can generate revenues really quickly. Okay, margins, profitability is more challenging, fair enough, sadly. But you can create a brand. We've created a UK brand in 3 years that many people know, and I didn't think that was possible. Without spending we have raised capital with investors and so on, so we have raised significant funds. But in the past, it would not have been possible to create a brand so quickly. You wouldn't have got distribution quickly. And we've done that without going through the supermarkets. So in the past, you wanted to create a food and beverage brand, you went to Tesco, Estelunga, Carrefour. Now we're not in retail. Now the retailers are coming to us. Sainsbury's, Marks and Spencer, we're talking to all of them because we've created a brand online that people know with a very high quality product. And now the retailers are in touch with us. So we've done it the other way around, and it works.
Good, wonderful. Ivan, tell us something. What's your take about Mac's presentation? What you do? Tell me about 5 Ventures and so on.
Yeah, hi. I'm Ivan. I am also Italian. I went to INSEAD. I don't know. We didn't have computers when I went to INSEAD, so it was a long time ago. So I was always a VC. I've invested over 20 years in technology and now in food tech. Moved from London after 20 years to Paris. I'm now in Paris. You cannot tell from the background because it's just a room. And then 4 years ago, we started to tell the story that we could raise a fund to invest with a venture capital mentality into a sector like food. And people looked at us as, we had smoked something wrong and said, like, well, how are you going to find those companies? So we started to tell the story of food tech. I think we were some of the very first people to say food and tech together will work. We told everybody, believe us, it's going to happen. And now 4 years later, we raised an 80 million fund. We made our first 8 investments. The portfolio is performing exceptionally well. And I think COVID came even to help in some extent. And I think, as Alex was saying before, it's not too difficult to create a good food company. People eat 3 times a day. No matter what, you can, stop buying holiday packages. You may not change your car this year, but it doesn't matter. You can still eat 3 times a day. And whether you eat in a restaurant or, unfortunately, restaurants are closed, you eat at home, doesn't matter, right? So we don't invest in restaurants. So all of this to say that exponential growth is not just a good company. So our story was you can sell food every day. You can get 10 million in revenues, and then what? If you put technology to it, whether in the product or in the delivery or in the supply chain, you can create hypergrowth. Hypergrowth is, let's say, 100% growth a year. And we have 8 companies that together have been growing 100% every year for the last 3 years. They didn't exist 3 years ago. This year we're talking about like real money, right? Hundreds of millions. So the thesis that food and food tech can generate great returns for investors and can be fantastic stories for entrepreneurs to create new great companies, I think is coming together. The IPO of Beyond Meat, I think, was like the moment of truth. Everybody saw, oh, wow, this is really happening. And I think the job that we have is to look at thousands of good companies and try to find the really special, exceptional companies. And I think in the presentation, Massimiliano put us twice, so thank you very much for the flowers, appreciate it. And I think one of our portfolio companies in Italy, a lot of the audience in attending tonight is Italian. So we were investors in Cortiglia, which is a fresh product online retailer, which is becoming an online food company. The moment you start to have your own products, your own quality assurance, your own brand, and a really solid brand, you're no longer a retailer. As soon as the part of the assortment becomes private label with high level of quality, that becomes a food company. And the difference is a retailer is worth a multiple, which is half or a third of the multiple of a food company. That's why we liked it. And I think the story of Cortiglia already before COVID was the creation of a national champion that could maybe become more, but we were happy with the national champion story, considering that Italy before COVID had a grocery online penetration of less than 1%, whatever the number is super small. Today, I think it's probably like 2 years ahead of growth, but it's still incredibly lower compared to the UK. Ocado, I lived in London for many years, and I saw Ocado IPOing and how they use technology to make sure that they could do what they do. Because let's face it, the four of us here, we can open up a corner store, get some fruit and veg, get some other stuff, and deliver it to 50 or 100 families. Can you do 10,000? Can you do 100,000 every single week? I think that is where things become really interesting, because then you need technology. And this is why we like food tech, and this is why we like companies like Alessandro's companies that merge great food with great values and use technology to scale up.
Okay, that's great. I think Max had the connection issue and dropped off.
He's back.
I think he's back now, or is trying to connect. So let's see if he's back, or I can start with the questions for you guys. So the idea was okay. Let's ask a question to Alex before he leaves us, and while Max tried to connect. So there was an event yesterday with GP Bullhound, which actually met through Even many years ago. And they mentioned that in the consumer market, it's kind of the marketplaces are winning versus traditional e-commerce. So for example, they said HelloFresh, which is kind of more similar to your business, where someone sells stuff to consumers, has a lower growth potential than the Deliveroo, the Glovo, or the marketplace, where there are two sides businesses. How would you comment to that? This is a hard question. I realize because you didn't hear yesterday's presentation. But do you have any? Why did you do the traditional e-commerce, and how hard is to scale a traditional e-commerce?
We know, but I've got two thoughts. One is, HelloFresh market cap is 8 billion euros, so it's not a bad exit. Other players similar to HelloFresh, like Gusto and Mindful Chef in the UK, are doing extremely well. So I think many people, they saw the Blue Apron IPO disaster, and they saw other difficulties as well, and therefore they thought recipe box companies doesn't work. And for sure, recipe box companies is challenging because of retention and customer acquisition costs and so on. However, people are getting more and more used, consumers are getting more and more used to having whether it's foods or recipe boxes or subscription products delivered to their home. It didn't really exist 10 years ago, and now contact lenses, chocolates, pasta, recipe boxes, it's becoming more and more common. So 10 years from now, it's going to be a bigger category, 100%. COVID has helped a lot, for sure, at least in the short to medium term. I think as far as our business is concerned, we really see ourselves as just a food brand, a very high quality artisanal food brand, which has got a pillar doing delivery to your house with a box, a pillar which is dark kitchen, and a pillar which is traditional food retail. So in one hand, we're a boring brand, i.e. we are an Ocado and we are in Marks and Spencer, so quite traditional channels. On the other hand, we are e-commerce. And on the third hand, we've got dark kitchens. So in a way, we're quite pragmatic. We see an opportunity and we go there. In the other way, our product lends itself to do that. So for example, HelloFresh and Gusto and recipe box companies, they can't really go in supermarkets, and they certainly can't do dark kitchens. And so they're obliged to sell purely on their e-commerce. Yeah.
That's interesting. Okay, I think Max joined us back. He had some kind of issue. So I think I'm gonna unmute him. Okay. Max, can you talk? I think you need to activate the mic.
Oh, okay.
Okay. Now we can. So I'm very happy to see Tommaso, who joined you. So I'm wow, Alex has a wonderful boy, which is the same age of my boy, which is coming. So hopefully we will not hear a huge cry from my side. So I just want to hear from Tommaso. I mean, just short presentation, who he is, what he does, and if he has any comment on Max's research, assume that he has seen before.
Yes, thanks. I saw it before because technology had some problem, and but we were able to manage here in Milan, and I'm here in exactly with a traditional. I take my motorbike and I join Max in his house. So thanks much for the welcome and host me here.
Unexpected but pleasant.
So thanks. I'm very glad to be here, and let's say I prepared a short presentation on the Italian market, mainly related to the private equity. So a much more mature market compared to what probably has been discussing. That unfortunately I missed it by the majority. So I saw the presentation of Max related to the private equity and the potential of private equity in the food industry, and I shared his thought and his conclusions. So what was the impact of the crisis we have here, the COVID crisis in all the value chain of the food industry has been quite limited from a side, but on the other hand, the recession that we are in now and this crisis definitely had some impact on the food and beverage industry. Probably a huge acceleration of the online businesses, but also probably a shift in the consumer and the behavior and demand of customers. So probably I really believe that in this time there will be more focus on essentials, so basic goods, on local, on sustainable products and healthy products, so healthy food. This is I think the crisis has accelerated this trend that were already in place, but this situation has been a boost to those trends. Private equity related activity in Italy has been very strong in the past years. So until February 2020, the number of deals were increasing years by year. with a strong interest from various investment. Of course, we are talking here about more mature companies, more mature, let's say, kind of industry, which benefit from the, let's say, private equity takeover and acquisition, thanks because of the possibility of build up and try to create economy of scale. The Italian food market, the traditional part, is absolutely fragmented, as all the rest of the Italian economy, but food and agri-food in general specifically is absolutely composed by a number of medium and small size companies that are typically have two characteristics: have an excellence in the production quality, a know-how in doing the product, and but typically they have no commercial capabilities, no able to go abroad, no able to, let's say, think to different channel, and typically they are always, let's say, if they sell to the grande distribuzione organizzata, so the wholesale retailer, are usually really pushed to the limit in terms of margin and in terms of competition. I think that let's say the goal of an investment strategy of a private equity is it's really to let's say help this company in growing the size and try to expand their capabilities, expanding the channel. So looking to different kind of type of sales, not only traditional clients, but also try to going abroad. The second part, that is the easiest part in some sort, is the build-up strategy that private equity is taking place. There are many examples in Italy of sub-segment in the food industry where after, let's say, in the intervention of private equity, there has been really a consolidation. I'm thinking about the industrial ice cream and food ingredients, and are really example of sub-segment where private equity intervention had really a boost and acceleration in this consolidation process. I mean, my view is that Italy could remain a great country where to invest, and food and beverage will remain a key sector for let's say for actually my company and for my competitors, and the reason of this is the intrinsic characteristic of the market. Totally really acyclical. So we said I saw the presentation of Max. Also the impact of the crisis has been quite limited only, and then the situation right now, I think there are another couple of elements that makes me believe that the investment in this sector will continue. Is currently the level of liquidity in the market is still absolutely very high. The level of dry powder, i.e. the amount of committed capital but not allocated, is still huge in the hand of the private equity. And then let's say statistically investing, if you look at the statistic of the returns of private equity firms which invested a quite significant amount of money 12 months, 18 months after a recession, typically they were able to generate returns higher than the average. And then let's say I'm currently working on several transactions right now. I see a really good deal flow in the food and beverage, and unfortunately I see a lot of competition on those assets. So So this is what I think about the, let's say, the more mature part of the market, the more traditional part, and let's say this is what I believe, and what is the contribution of private equity. Sorry, I jumped directly into the presentation, and I didn't.
That's fine.
I didn't introduce myself. I mean, I've been working in the private equity industry in the last 12 years. I started private equity in 2008. Now I'm a partner in Armonia SGR. Armonia is an Italian private equity. We are actually a generalist, so we do not have a sector-specific focus. But of course, our let's say our goal is to invest into Italian companies that are active in recognized made in Italy sector, and of course, food is one of the pillars of the made in Italy brand. So it's clearly one of our main focus. Before joining Armonia, I was working in Alto Partner. Alto Partner is a small Italian private equity, really focused on that has done many food and beverage transactions, and then Ergon Capital, a pan-European fund, and I have a background of investment banking before. So this is.
Very good. Thank you much, Tommaso. I think I have a question for Ivan, which has to leave us in a few minutes, unfortunately. So the question for Ivan is about the quality of the deal flow and how it compares the quality in Europe versus US, if this is US deals, and within Europe, Italy versus other countries, where I'm biased and I believe that Italian deal flow is weak, and there is a reason why Alex didn't do Past Evangelist in Italy, but went to London to make it. So just comment on deal flow.
So as a fund of 5 Seasons, we invest throughout Europe, so we look at deals from everywhere. Just as a reference, we probably get about 1,200, maybe a little bit more deals a year. So it's a huge amount of deal flow. So statistically, I think it is relevant. In Italy, we do have quite some deals coming from, and we do have a person, Giancarlo, based in Italy. So we logged about 400 companies over the last 2 years, from really tiny kind of university startups to, Cortiglia. Yeah, I think the deal flow is so the number of deals is probably similar to other countries. The quality of the deals is weaker. We were expecting Holland and the UK to be the dominant market. There is a huge amount of technology being developed in Wageningen or in various universities in the UK. UK is strong. The big surprise for us is Germany. The Germans, they don't have the same culture that we have in Italy and France, and that is actually an advantage when it comes to food innovation. There is less barrier to break. There are less tradition to break. Traditions are innovations that worked very well many years ago, right? And they're still working well. But in terms of the openness to meal replacements or plant-based protein products, Southern European countries are not as active. Generally speaking, Italian entrepreneurs are not able to raise money because they're not ambitious enough, and because they're not ambitious enough, they cannot raise money. Right? So I don't know exactly. I've been doing this for 20 years, and I've seen thousands of Italian entrepreneurs. I still don't understand why there is so much localism. There is so much, ignorance about what is available. And we see entrepreneurs taking deals that would never be done elsewhere, simply because there is more capital maybe, or maybe because they're better at telling their stories. But yeah, I mean, they're good engineers, they're good technicians, there's no problem with that part. is just the ability to, you know, as a founder, Alessandro knows it, you know, the first job of a founder is to raise money. I hate to say it because yes, it's to build a great product. Yes, it's to gain customers and to build a great team. Yes, all of them. But unless you have your own money to start with, you know, you have to find money somewhere. And I think so far, you know, when we met the team at Cortiglia, for the first time, we met a team that is European quality Serie A, the same championship level, right? No mistakes. And some of them are not Italians, you know, they have Spaniards, they have French, they have various nationalities. It is a company that could have been in London or could have been in Munich or in Paris, but it's 1 in 400.
Can I interject you on Cortiglia? Because if I compare Cortiglia with Past Evangelist, and I know them pretty well, Past Evangelist is scaling much faster. So Cortiglia is in the market since 2011, 2012, so it's 2020. So yep. Maybe yep. COVID-19 is the turning point, hopefully, but why Cortiglia and not? So you did not invest in Past Evangelist, neither did I, and
I should have.
I should have, exactly. So why?
I think there's a matter of scale. I mean, we've known Alessandro since the very first recipe that he created, and I think we're still very good friends, and we talk about this all the time. I think as a fund manager, I invest 3, 4, 5 million at a time, and Alex was raising much smaller amounts, which is totally fine. I think he didn't need that money. Cortiglia on the other side had already gone through the quicksand of raising the small amount of money, trying to optimize production and yield. Doing what Cortiglia does is very difficult. Right? You may think, okay, you get vegetables and fruit, you put it together and send them out. It's not that. It's a lot more complicated, and it takes years to perfect. People don't appreciate it maybe, but in food waste is a killer of your margins. Cortiglia has less than 1% food waste cost. Less than 1%. It's really, really difficult. You need procedures, you need years of experience, you need to put it together. So the reason why we invested in Cortiglia is because they've gone through that experience. They came out having done it with little money, right? Because they've done it with little money. And now I think they deserve a chance to scale up and, cover the whole of the north of Italy and then maybe beyond, national-wide over a number of years. But I think Alessandro is gonna do the same. I think we speak a lot, and I know what he's doing, and I think he's going to do fantastically well.
Wonderful. So if you need to leave, just leave us. No worries.
Okay.
Okay. Thank you.
Thank you very much
for coming.
Bye.
And I have a question for Tommaso, which is what is the hardest problem that you face when you deal with an entrepreneur? Meaning, you mentioned about the competition in deals, and everyone on the private equity market says that every deal is auctioned, every deal is intermediated, and it's harder to establish a personal connection with an entrepreneur, as Ivan and I did with Alex. So how do you win deals? What's the story?
That's a good question. First of all, I totally share what Ivan was saying about the mindset of Italian entrepreneur. I think I really see it also, in bigger company, in a family-owned company, they probably have a mindset in maintaining and protecting their status quo, and not really thinking in with a higher goal potential and would boost growth, and so it's quite. They always see, first of all, typical Italian entrepreneurs see they open to their capital only when there is some, really big step, big transitional step that they want to take. That means, or either a generational change, or really have a. It's not typically open. They do not open their capital if they do not see. A sort of way out from them. It's true. There's competition. It's more difficult to build up, let's say, a personal relationship with them. I think the key element of winning deals in Italy, especially in Italy, of course, you need to play the game of the rule of the game. So you need to be prepared to pay the right price for the company, but then you also need to let's say try to show your capability in taking care of their babies, their company, and make it grow. So really, I think the winning point is when you are able to show at the beginning that you will take over his company, or you become a partner with the entrepreneur, and you will bring value. Of course, it's much easier if you have a track record and you have a history to show, and this, I think those are the main two elements that you have to build with the entrepreneur. Of course, you need to play with the rule. What I see here, the situation, as I said, I believe the deal flow will continue and there will be a lot of opportunity. My question mark, but it's really one of the key questions I have right now is it's a sort of valuation gap right now. The probably seller expectation remains in the world before February 2020. And so I think there will be a much more gap between the seller expectation and what a buyer could be ready to pay right now. Good assets will remain with a high price, of course. I don't see the situation right now. I don't see a crisis of leverage, so financing will be there. Will probably be a little bit lower, but not significantly lower than pre-COVID. So I think there will be some gap between. So discussion could be more difficult, and probably you need to think really more long term and not looking only at 2020 results. And then, of course, there are some technical tools that you can put in place. For example, talking about earnout, ratchet. So you need to, of course, find some mechanism that can help, let's say, fill up the gap and try to close the deal.
Okay, that's great. In the meantime, you have seen me moving because my little one was coming, so and he's screaming on the other room. So unfortunately, two of the three speakers left us, so it's going to be a bombarding Q&A session with you answering all the questions that people might have. So let me ask you the last question, then we'll figure out how to make the third session, which is about the value creation activities that you put in place after you win the deal. And you mentioned about the internationalization. You mentioned about probably new management in the company. One part which hardly is mentioned is the investment into technology. So it is, I mean, I still see that private equity owners and companies still in Italy still have not a huge innovation mentality in terms of getting a company and moving the business from traditional business into deep tech space. And let me make an example, which is a large Mexican company, billion-dollar company called Grupo Bimbo, which does bread. And they are investors in a Series A company called Clara Foods, which makes eggs without the actual egg. So deep tech. And in Italy, there's a company which probably Tommaso knows, which is called Eurovo. And Eurovo makes about €500 million in revenue. So it's decent size. So it's not Grupo Bimbo, but it's decent size. And what Eurovo would say if they know that in the US, there's a company that makes eggs without actually the egg. So what's talking about deep tech and real innovation, not just opening an e-commerce or just entering new markets which are normal. And it's a long question, it's very complicated, so you can simplify.
It's a question, really. I agree with you, and I would say yes. Private equity, traditional private equity, do not have a major focus on technology innovation and technology breakthrough. I think a reason of this is I think it's really practical. I would say it's first of all, we have an investment period that when you invest in a company, we need to exit in. It's like eggs. After a week, we need to sell. In this case, after 3 years, 4 years, or 5 years, we need to sell. Typically, let's say innovation, technology breakthrough, as you mentioned, like having eggs without eggs, could take much more than 5 years. So I think it's a matter of investment period, timing of the investment period, and then I don't know, doing a P&L of a private equity. Typically, they do invest in the number of investment of portfolio company that they do own is much lower. So you can you need to be, let's say, you need what your investor, your LPs are required is to have try to have a more consistent a return more consistent as possible, and not having, let's say, of course, big success are always welcome, but you cannot, you have to avoid to have write down and failures. So probably this is the answer. I think this is the answer, but I totally agree with you that I think we need, in this case, the real investor should be more specialized funds that are looking at technology.
Okay, perfect. I think since we have only about 30 people left in the meeting, I think we can try to skip the end session and resume the session. So if someone has a question, they can either put on the questions panel or in the chat, or if they were so brave to test the mic and the video camera, and they have laundry like me in the background, they can raise hand, and I think I can give them the ability to talk. So let's see if there is someone that has a question for Tommaso. I mean, otherwise we're gone way after the allotted time, so I'm sorry about that. It's I'm not a professional host, as you can imagine.
Let me just thank the AirMeet team. I mean, I spent an hour, almost an hour, talking with them, trying to fix my computer problem, and then we solved it. So if they are listening, I just want to say they were very nice, and we were not able to solve the problem, but they were very professional.
Yeah, absolutely. I mean, AirMeet, I mean, I'm going to ask clearly all the attendees about how they felt with the platform.
Corporate computer, maybe I had some, let's say, blocks.
It's interesting because actually the first investor in Zoom is a friend of mine who invested back in 2014, and it told me how the common story is people telling him why using Zoom when there is Skype, and this is 2014. And then now Skype, no one uses Skype anymore, and everyone uses Zoom. And I try to do a different way, and using AirMeet, which is more designed for live events. So hopefully for them, AirMeet will be the new Zoom. And there's another company called Hopin, which is in live event space. And if unfortunately COVID-19 will stay with us, probably we're gonna get used to more of these live events. So let's see if there are questions or people brave enough to raise the hand. I think there are not. So let me ask another question to Tommaso, and then we might give it a go to the event, which is, again, in terms of winning deals in this food and beverage industry, which is stable, sometimes high margin. So why should the entrepreneur sell the business and not pass it over to their family members? So is this just a generational transition and issue in getting a deal, or why should the entrepreneur sell the business?
No, I think they should sell the business because, of course, one of the reason could be that what we discussed before. I think the trends are changing, the consumer behavior is changing, and probably in order to be able to catch this kind of those trends, you need to be a little bit more innovative, to invest a little bit more in human resources. Typically, a family-owned company is not able to attract experienced managers that, while a private equity usually tend to have also. It's clear why they're able to attract experienced managers also from big corporations to a smaller company, is because they have much more, let's say, incentive in the value creation. So I think this is clearly something that a company which is supported financially and let's say with a method and with the right human resource, it is able to catch those trends while remaining alone. Either you need to cover all these aspects. So I think this is the main reason, and it's not only financial. It's really method and people support.
Okay, good. We have a question from Jacopo, which is a student at Wharton. He asks how you think about pushing Italian food companies to explore going international versus professionalizing operations and focusing on the Italian and European market. So just more, it's the management comes first or the international expansion comes first?
I think there are some success story there of Italian company going international. I'm thinking not necessarily backed by a private equity. I'm thinking about Rana. I mean, actually, Rana has been able to do a huge success in the US by investing directly there in the US into a production plant, bringing, of course, the know-how of doing pasta fresca near Chicago, and build up the plant. Probably now the plant in Chicago is bigger, is a bigger production capacity than the ones that Giovanni Rana has here in Italy. So it's I would say probably it's more important, let's say, have the right management team to go international. That's it.
It's hard to decouple that.
Exactly.
Then we have Emily, which asks interesting question, a bit harder.
Huge. I mean, I invested in a company, a small company, in the bakery. They were not able to speak English, and they were selling not a huge amount, but they were doing 3 million euro sales in US, and they were not able to speak English. So the potential, we entered the company, we strengthened the commercial department, and that market exploded. I mean, they were able to do 3 million euros just because, let's say, two American retailers, they were, let's say, stunned by the quality and the capacity, the production capacity that they have in Italy, but they were not able to speak English. It was
interesting. Then Emily has a question, which is how food delivery companies are navigating the crisis during and after COVID, and a big difference across markets, South Korea versus UK versus Europe. And we heard from Alex that COVID has been an amazing push for his business. And I know other food delivery management managers around the UK, and they all say thank you to COVID. So any comment about that? Do you have any insider number to share about the delivery business?
No, and let's say, to be honest, no. Unfortunately, I have some example on the other side. Let's say the retail business. I mean, it's the traditional food restaurant, food, and the traditional chain has been, but not only traditional, also, let's say, the innovative format of ice cream. I have inside that, let's say, the delivery service has been partially compensating the loss. The real problem, I mean, they have been very hit by the loss in consumption. Outside consumption has been really down, and the percentage covered by delivery, of course, it has increased, but not covered the rest. But I mean, of course, the only company focused on delivery, of course, that been I agree with them that has been a positive, the COVID. Not for the rest of all the traditional or also omni-channel chain or retail chain. I mean, the omni-channel means different channel delivery, outside, at home, and of course.